something that started like early on in life? I get asked all the time, so I'm curious how you got into it.
Yeah, for sure. So I definitely did get started early. And so I think my foray into it was sort of in conjunction with a fifth grade stock market school project. And so we had to do research a company, present on it. And then we also had a sort of fake brokerage account where we managed a certain amount of dollars and, put it in, and whoever won over the course of 3 months won some trophy or something like that. Sort of in conjunction with that, my parents sort of said, hey, if this interests you at all, you can invest real money. So they set up a brokerage account in my name, and I did that under the purview of my parents. And I was immediately captivated by it. So like the notion of researching a stock, making a qualitative and quantitative assessment on it, placing a high conviction bet. If you're right, you make money. If you're wrong, you lose money. Just like combined all the things that I was interested in. So definitely got started early and did it for middle school, high school, into college and beyond.
That's pretty early. That's sooner than me. My parents were into real estate investing, so I got a lot of exposure to that. My dad didn't do quite as much in the stock market, but he did have a Schwab account. He showed me some stuff there, but I got started earlier 20s, so a lot later than you.
I don't know if I was coming up with any profound thoughts in my, fifth and sixth grade class, but, definitely had the career, like the progression of more informed investor as time went on.
Yeah. No, that's the same thing that I found and I see a lot when people get into it, they're like, wow, this is actually really interesting. This isn't boring. Finance is supposed to be boring and not a fun subject, but when you get into investing, it can be really fun. So I was wondering, I read that you started M1 Finance when you were 25. Is that accurate?
That's correct.
Where did you get the idea for this? Because I don't know a lot of 25-year-olds going out and starting brokerages.
Yeah, in retrospect, I might have started my entrepreneurial foray with like an easier industry, but you live, you learn. It was really in the management of my own money. So, did the middle school, high school, into college, sort of progressed as an investor, and it was looking at the investment tools that were available in the marketplace and just being relatively underwhelmed with what was out there. That personal finance is something that every single person has to do. They have to manage their own money. And I didn't think that the consumer applications in personal finance were at par with the consumer applications that you use in everyday life. And so, you pick your favorite service, and I think they're just leaps and bounds above what was offered from the financial service industry. And I also didn't think that there was a lot of do-it-yourself tools that were geared towards long-term investors rather than trading platforms. And so, M1 was really the manifestation of how I wanted to manage my own money from an investment standpoint, but then moving more broadly into all of my personal finances. And so, that's generally the progression the company has taken. Was started with a personal need, and then a little bit of hubris and naivete that led to start the company.
Yeah, you get in there and. I'm curious because my first impression of it was the same. It was totally different than other brokers. So like I said, I'd used Schwab 5 years ago. I've seen it with my dad's account, and it's just really archaic looking. And then you get to a service like M1 Finance, and I'm blown away by how easy and simplistic everything is with it, how clearly it's laid out. I'm curious if the technology side, because what you're doing is you're starting a finance company, a fintech technology side. Was this something where you're primarily interested in the finance side and the technology side just came along with it? Or, was it something where you're also interested in starting a tech company?
It was definitely a combination of both. I think in some sense, M1 perfectly mirrored my interests. And so from the investing side, I do think finance firms have massively overcomplicated what investing needs to be. And in some sense, it's almost just an artifact of the way that the finance industry was built up, that it just, it has its days of the open outcry and buying shares and, trading in 16ths of dollars and things like that. And, there's a much simpler way to do it. And in some, I do enjoy the act of simplifying things pretty dramatically. And so I think it's way easier to understand, hey, I want 5% of my money in this investment, then I want to have this order type of this security at this price that translates to this market value. There's just a lot of things that you can do to simplify the nature. And then I really like the notion of automating things. And so the ability to sort of do more with less, and how can you make a decision once and then have software do what it's good at and just have it just continually power and automate the sort of administrative notion or the manual entry of various things. And so I think it was sort of combining those two things of how can you simplify it and then how can you automate it, and and then there's just general business intrigue of hiring a team, managing them, operating in a complex environment. And so it was just a whole bunch of different interests that combined into one thing.
No, for sure. That's a lot to take on. I'm curious if you, so you look like you had the vision of it, but did you just go out and find people that had the technology experience to do it, or how did that work?
So starting a brokerage, it's not one of those things that a couple people in a garage can put together. There's just a really heavy amount of regulatory and compliance work, and you have to be well capitalized from the financial perspective. And so we were able to raise a good amount of money early, and so that was it was really a founding team that started M1. And so I had the vision, I had the finance background, and enough computer science to be dangerous, enough to call out my engineers when I know that they're lying. But it was really a founding team, and so we had a operations lead, a compliance lead, a product lead, and an engineering lead sort of from the get-go.
Okay. Yeah, that's what I was curious about, because I've worked on, a background as a programmer. There's not something you could jump into as creating a brokerage without assembling the whole team from the start. So so you just reached $1 billion in assets under management. Is that right?
Yep.
Like towards the start of this year. I'm interested to know, out of all the things that you go through when you're creating this, when you're dealing with competitors, trying to stay ahead of everything, all the customer service, everything that's involved with it, what is the most challenging aspect of getting to that point, of getting $1 billion?
There's definitely a lot. And so, it's hard to distill it down to the one specific thing. And, if I sort of like high level categorized it as two different things, I think one is exactly what you mentioned, that there is a incredible amount of work that goes in to support everything that we do, and the end customer only sees, maybe 10% of it. So the interface, the design is really just like the front end skin of all the work that we've done behind the scenes to, have the technology to support it, have the regulatory environment to support it, the financials and the like. And so, I do think that there is we probably did, spend 10x the amount of time on things that the customer never sees to get that one piece of feature or software that they ultimately do see. And so, just the breadth of things that you have to do is difficult. And then I think the notion of going from a idea to something that people trust their money with is, it's a high hurdle to go over. And so, the first dollar that we got from the random internet user and saying, hey, we are a credible service and we are a superior platform to Ameritrade, E-Trade, Fidelity, Schwab, and getting them to put their hard-earned dollars, bring over their brokerage assets, just building up that credibility and trust was a long process, and it's still very much an ongoing process. The nice fact is we now have well over $1 billion, 150,000 funded users using the platform. They have become, our salespeople and advocates, sort of saying, hey, this is a great service that you can trust, and I manage my money on it. You can manage your money as well.
Yeah, that was one of my questions, is because I shared M1 even before starting YouTube or anything like that. I shared it with different family members and stuff, and the question that always came up right at the start was this kind of unknown company that you're putting a lot of money into, and there's other companies, there's the Vanguards and Schwabs that have their name very well known and trillions of dollars in assets under management. For people that are still in that category of, I have a lot of different people that come and view the channel, and they'll say, where did this company come from? So what do you say to people that are like, why would I trust my money with a smaller brokerage? It's a startup company when I have options like Vanguard and Schwab. What do you tell people that have that concern?
If we had the perfect answer, we'd be at, the trillions of dollars in assets rather than the billion. In some sense, Vanguard and Charles Schwab started at some point, right? There was the 1970s, and in some sense, they were facing those exact same questions for Morgan Stanley and Merrill Lynch. And, in some sense, they offered a fundamentally better product, better price, and built up that credibility, brand, trust, and the like over incredibly long periods of time. And I think M1 has to do the same thing. It's not something that we can flip a switch and have all the credibility and trust that people have built up over decades. I do think that there is a huge benefit to being new versus old. That you were talking about Charles Schwab having sort of archaic systems, and it is one of those things of some people at some point are going to have to reckon with what am I willing to pay a premium for a worse service just because it has a better brand name, or am I willing to go with the new service who is really innovating, pushing the ball forward, creating a better service product, lower price, and the like. And so I think it's, M1 has the opportunity to build that trust over incredibly long periods of time. And it's really like every interaction we have with the customer is a opportunity to build that. And it's going to take time. I think the people who sign on now get there is more of a, I don't want to say a leap of faith because, we have all the security and regulatory environment, you're insured and protected, but you are more trusting for M1 than you have to be with a Charles Schwab. I think the sort of benefit is they get a better investing experience, and I think over time more people will come to realize that.
Yeah, I think that's the same type of path I followed. When I started, it was 2 years back, so it was even less known than it is now. A lot has happened over the past 2 years, and that was my biggest concern too. Was, all right, I'm switching from one that's a little bit more well-known to one that's not as well-known. So I do research on the company and see all the insurance and everything, deposit a little bit of money, see how it functions, make sure I'm comfortable with it. And then after getting used to it for a while, it builds trust over time. But I think it will be the same thing. It's kind of a snowball effect. The bigger it gets, the more inherent trust you have with it.
Yeah, no, absolutely. And yeah, we see that behavior from a lot of our customers of, they're willing to trial it out, but they, deposit money. They want to withdraw money to make sure that it comes back, and it is the sort of snowball and compounding nature. And, it's a lot easier now that we have all the users, the reviews, the Reddit forums, the YouTube channels, and the like than it was in the early stages.
I'm sure. I want to talk about the coronavirus. I'm interested to know about this. Obviously, it's changed the way businesses have run. And people are working from home. Everything is changing. I'm interested in a couple aspects of this. One of them is the effects it's had. If you know any insights on the market and user behavior, specifically with M1, is there any trends that you see with people? Did they move to cash? Did they sell out? Was there any stocks that they went to or anything like that?
Yeah, for sure. So in some sense, now that we have the 150,000, we do have a broad base. And so people do a whole bunch of different things. And so, but to generalize, before March, when, everything sort of started being really serious with the coronavirus, users held about 6% of their assets in cash, and now it's currently about 10%. So people did move up, but it wasn't a huge fundamental switch to cash. And so there is a little bit of a pullback, a risk aversion of people moving to a safer, more stable asset. New users went through the roof. So we were signed up more than 2x the amount of users in March than we did in February. So, it's people were looking at it. The market was top of the news, the drop. People were looking to get invested for the first time. Deposits went up 2.5x. So more people were investing, and then withdrawals went up about 30%. So, you did have a broad mix of what people were doing. That being said, the biggest behavior that M1 users were experiencing were, hey, this is, the market's 30% cheaper. It's at prices I would have had to purchase 2 years ago to invest. And so, the long-term orientation of our user base made it so that it was much more people adding to their portfolios than withdrawing.
Yeah, I think that's right. I can see a couple dynamics. One of them is definitely the news. There's lots of content creators that never make stock market videos. All of them are making stock market videos now. Yeah. So I'm sure that gives it a bump. It's in the top of the news every single day. So I see that side of it. And then I also notice, I don't know the age demographics of M1 users, but it seems like they are more long-term focused. And it seems like people that are starting off their investment journey are wanting the market to come down rather than they're frustrated if it goes like it's going up right now. And a lot of users are very frustrated that the market hasn't come down a huge portion so they can start off their investment journey at a lower price point. So some of that makes sense.
No, for sure. M1 is definitively an investing platform, not a trading platform. It is incredibly bad if you want to buy at 10 a.m. and sell at 11 AM and sort of, play that price game and sort of say, hey, I'm willing to buy it and sell it to someone else at a higher price and try to predict those moves. I think that personally stems from, I don't think that's entirely knowable. And, even if you want to do that, there's fantastic tools out there, go have fun. It's enjoyable. I don't know if it's the best wealth creation tool. For M1, it's definitely built towards the benefit to owning these securities is in the ownership. And, it's sort of the Warren Buffett style quote of you'd be happy owning it if the stock market shut down for 5 years and, you never got a price on it again. And so, it definitely is you're long-term oriented, you're systematic investing, you want to own these securities or investments over long periods of time, you want to systematically contribute to it. And it is something that you would rather pay a lower price than a higher price. And so, in some sense, a lower price is an opportunity rather than, something to be worried about.
No, that's very much the type of investing I talk about. So it's not, I get a lot of angry people because I talk about day trading. I'm not too huge of a fan of it, but people can do that strategy. I'm not good at it. I'm not going to try it. M1 fits the use case that I have a lot more. I'm interested, if you had an ideal user, you talk about long-term investing, was it crafted like for any particular type of ideal demographic or type of user?
Yeah, I think we probably build it more for like a psychographic persona, how you think about your investments more than a demographic of how old you are or the like. But, I think there's really two big things that sort of fit with that. The first is the like long-term versus short-term or, investor versus trader. And so, we definitely are, hey, you are managing your finances for the next 5, 10, 15, 20, 40 years and really trying to take, hey, you need to prudently manage, systematically add to it over time and have that long-term horizon rather than, Monday to next Wednesday. We sort of think that is sort of unknowable. And 4 years from now, when you look back, you don't know what the correct price was on that Monday versus Thursday, but you can sort of say, hey, a company is undervalued or it has a competitive advantage that will last for long periods of time. So the time horizon is one thing, and we definitely appeal towards the investor, not the trader. And then I'd say the second thing is you have to be engaged with your finances. And so this like sort of manifests in a couple different ways. One, you want to use a platform to do it yourself versus work with an advisor. And so those are like very different mentalities of, hey, I don't want to touch this with a 10-foot pole versus, I enjoy this stuff. I like reading Seeking Alpha or Yahoo Finance or watching CNBC. And, they're reading the Wall Street Journal and having a, interest in what's going on in the world, the economy and business and the like. That also leads you to have a perspective in what you want to own. Even if you're sort of that bogglehead, low cost 3 Vanguard portfolio, it's a mentality and you want to make your choices rather than give it to someone else to manage.
Right.
So, I think it's like the long-term nature and then I want to, manage it myself rather than, give it off to someone else. Those two things, I think M1 becomes the premier tool. So it's, all about low cost, automatic, systematic investing in a portfolio of your choosing.
Okay. That's what I figure. It would be, trying to use it as a quick day trading tool isn't the best use case for it, but it doesn't fit the style of investing that I'm interested in doing. And I think most of the people that view my content are pretty long-term focused as well. Back to the coronavirus. I have another question on this. So the investing behavior is one thing. What is your impression you're getting out of, generally speaking, you're running a company, you're the CEO of a company, you might have a little bit of a different insight into how it's affecting businesses, the type of efforts you're taking. Do you have any insights in what you think this will be in terms of how this is going to affect small businesses, long-term or short-term? I know it's a lot of unknowns, so I'm asking a lot there, but.
Yeah, for sure. No, I think it actually affects the day-to-day of M1 less. And so in like the pure micro sense, how we run the company, not that much changes. We're a relatively new company. We've been around 4 years. Our focus is just continuing to build the best personal finance platform that we possibly can, ship new features, add capability and the like. And, we sort of say, hey, people are going to have to manage their money now, a year from now, 5 years from now, 10 years from now, and they're going to want the best solution. And so the best thing we can do is be, sort of the world's going to go through a bunch of ups and downs during that entire process. Let's just build the best thing that we possibly can. And so, I don't think it has changed our day to day that much. That being said, everyone's playing like armchair economists and epidemiologists and this whole thing. I think like the hope is in 2 years, the health issue isn't that much of an effect, right? We either have treatments or a vaccine or a cure, something where, the health consequences, it's more like January than it is like April. And then I think it's, there's going to be a huge demand shock over the next 2 years, and it's whether there is a significant amount of fiscal and monetary stimulus to sort of support that flow. I think that's going to determine how big of a shock it is. I think the hope is we get over it sooner rather than later. There's a whole bunch of new, fresh liquidity in the market. Things go back to normal, and things progress in a quicker amount of time. I do think it gets back to the short term versus long term. I think prepare for a bad year. I think in 3 years things are going to be better than they are now. And so, if you're thinking long term enough, I don't think it should change your investment style all that much. Right.
No, that's the Fed and the government's definitely offering a lot of liquidity right now. So I think the same thing. It's definitely, nobody knows what direction the market's going this year. It's very difficult to guess. Having it go up right now is pretty surprising for a lot of people. So we'll see where it goes. It doesn't change my plan. I think a lot of the viewers and people that watch my content, they're still focused 5 years in the future on most of their investments. So it's like if it does drop down, we'll try to invest more.
No, for sure. And with the short-term timing, it going up and going down, it's almost like in retrospect, it's hard to predict if you had the news ahead of time, what was going to happen, you couldn't determine what the market was going to do. And so the notion that you can't, with all the facts, determine what the market's going to do in any given month, the notion that you can predict it moving forward, I think is a fool's errand. And so, especially in the short term, but it does get back to, in the long term, I think things revert more to their fundamentals, and those are things you can analyze and have conviction about.
Right. Yeah, you could have, if we went back to 2019, you could have all the Wall Street Journal headlines of 2020 and still have no clue what direction the market's going to go.
For sure. And, similar things to, you could have had the job unemployment numbers the night before, and every single one of those coming out, I predict the market going the opposite way that it, actually did. So, it is to predict what the world, like a random thing's going to do in a short thing. I think it's a lot of wet finger in the air estimates as opposed to any sort of scientific precision that you're going to have.
Okay. Well, no, I agree with that. I have a question. Do you have any, do M1 Finance users buy any specific type of stocks, any type of equities, or is there anything that you think is unique to investors of the platform, or is it just representative of the larger investment world?
We do have our fair share of dividend investors as a result of some of the content that people,
I'm sure. I take 100% responsibility for that.
Yeah. Broadly speaking, about half of our AUM is in ETFs, and then the other half is in individual stocks. And so that's the breakdown for the stocks. When you go to individual stocks, it roughly does correspond to their overall market cap, with probably a little bit of a tilt towards, consumer brand known names versus the, company that makes some infrastructure widget that is a huge, massive company, but few have heard of. So we probably resemble the broader market more than having. We definitely don't there are some other fintechs where it's penny stocks and stocks that you would cater to millennials. We definitely don't have that.
That's Robinhood. I'll say it. You don't have to say it. I'll say it for you. No, that makes sense. I would guess that it would be more of the big cap, well-known brands type of thing. I do have. So I'm curious. You were able to. I read different blog posts that you put out. Like I said, I joined M1 over 2 years ago, and I remember reading some of the posts that you wrote then, which were somewhat unknown, but you said that the future of finance is free. At the time, M1 just moved to becoming completely free. And that's what part of made me skeptical about it. Normally in the financial world, when I see something where it's too good to be true, it rings a lot of like just bells of this is red flags. I should be concerned about this. It's too good to be true. But you guys were one of the first ones to go free, offered fractional shares, and you talked about how the future of finance is free. And that was a prediction that you said that pretty much every other company is going to start offering free shares, and that they'll start offering fractional shares. They'll start moving into this stuff. At the time, that was not the general consensus. So I remember lots of different people in the financial world saying that the bigger brokerages do not need to move to becoming free, that they have their client base. They make a lot of money charging fees on trades. So you were able to predict that. I'm wondering if you have any other insights or things that you think is going to be the future of the different trends brokers go through, generally speaking.
I think there's two big things that are going to sort of be what most financial service firms are moving to. The first I've already talked about a little bit is automation. How can you make it easier to do more with less? And so, I think every single big brokerage is still built around the manual trade. I want this amount of dollars or this amount of shares, this order type, click a button, place it. And then when you want to buy the same security next week or every 2 weeks with your paycheck, go do the exact same thing. And I think there's going to be a ton with, tell a software platform once, here's how I want my money managed, and then have it do the administrative or the manual tasks in the background, and sort of let a computer do what it's better at, let you make your decisions, but really have the software and the automation take over for the mundane, boring stuff. So I think automation is huge, and I think that's across investing. I think that's across your budgeting and cash flow management and your borrowing, just everything that you can do. It's software can automate your personal finances, sort of akin to a team of 3 people working in the background to sort of optimize your finances. And then the second, I think that there's been a big wave of sort of holistic solutions to point solutions. And so, like you used to do everything with a Chase or a Wells Fargo, then you had, an app that did one thing. And I think you're moving back to the platforms and the things where it sort of integrates all of your personal finances. And I think that there's benefits to doing more of your personal finances on one platform. And so in the M1 sphere, the invest borrow relationship is probably the best example of that. Of if we have your assets on the platform, so if you invest with M1, we can let you borrow for cheaper. And so it's sort of a symbiotic relationship where we can help you manage one side of your balance sheet better if we have the other. And there's a benefit to the integration where the whole is greater than the sum of the parts. I think the same thing happens with we have M1 Spend coming out, and there is if we have your cash flows of receiving your income, how you spend money, can we provide analytics so that your investments are better, so that your borrowing is better, so that we can lower your cost of borrowing, help you invest more? And I think there's a whole bunch of benefits to the integration, and I think that's going to be the next wave of finance as well.
Okay, so you're integrating it with these different type of services. I like having the line of credit. Like knowing that I have access to it at any given time to that cheap of a margin rate is pretty incredible. I'm wondering, so what are your plans? If you know that these other big brokers, they're going to start moving into the sphere, right? Just like they did with fractional shares, just like they did with free trades. And one thing I always see whenever a legacy brokerage comes out with a feature that was formerly exclusive to M1, there will be all the online comments of people saying, this is the end of M1. Now they're offering fractional shares, right? You get that type of talk.
We see them as well.
Yeah, I'm sure you're aware of it. What do you do to stay ahead of the curve with it?
Yeah, I think it's important to realize that M1 has been around for, publicly facing for 3.5 years. A Fidelity has been around for 40, right? And Fidelity spends, $1 billion a year on their technology, their interface, and the like, and it's still bad, and in some sense, for me, it's less about like the feature set right now, and it's more about the pace of innovation. And so if M1 has been able to build a digital automated brokerage for free, a low cost line of credit, lending facility, a digital banking service, all in 3.5 years, and on a 1/1000th of the capital that they spend on a weekly basis, I'm more encouraged of what M1's going to look like in the next year, 2 years from now, 3 years from now. And I sort of refuse to believe that, how people manage their money in 2020, like the feature set is done, the user platforms are done. We're not going to, expand and benefit and, progress over time. And I just think M1 has a culture of more rapid feature development, feature release, improving the product platform, the integration across everything. And I think you're going to continue to see that expand and accelerate over time. And I think that's what gives me comfort of the big brokerages. They're just slow moving. From time equals zero now, who do I think is going to have the better platform in 3 years? I think M1 by leaps and bounds.
Yeah, well, I noticed some things. The technology stack with it is a lot more modern than a lot of the other brokerages are using. Even looking at the security of it, like some of the older brokerages have their type of two-factor authentication is only through text message, and M1 will have like a Google Authenticator and newer forms of authentication. So I think, for me, it makes sense that a newer brokerage with you don't have all the legacy updates you have to do every time you implement a new feature. So. Well, I'm curious. I have about 40%, give or take, of my viewership lives outside of the United States. So a lot of them are in Canada and Europe. And I get asked all the time from people that are viewing me using M1 Finance, and they're very jealous of the brokerage. They want to use it. So I want to ask on behalf of them, how do we get it into their hands? How do we get them to be able to use it? What are the hold-ups with it?
For sure. I would love nothing more than to open it up and offer it to anybody and everybody that could use it. And we get the same thing for foreign nationals, and then even people under 18. It's a pretty cumbersome process to open up a custodial account and the like. And so there's a lot of people who we would love to serve that we're unable to. The issue comes down to regulatory more than anything, that any brokerage or financial service firm has an obligation for it's called customer identification, know your customer, and then anti-money laundering rules. And the second that you have foreign, money coming from foreign banks into the U.S. financial system, it just adds a whole bunch more regulatory complexity that we have to invest in to support, to monitor, to meet all the requirements. And so there's just a capital investment that M1 needs to make to be legally, in good standing with our regulators. And so that is the holdup. It's something that we want to get to over time. And so I think there's probably going to be two stages of it. One is allowing foreign nationals to invest in U.S. companies on U.S. markets. And that is, having all the regulatory compliance stuff to monitor the money coming in from overseas. And then the second would be to launch it on their home soil. And that is going to be a much lengthier process. That securities rules are different, exchanges are different. So that's really rebuilding M1 from scratch, to be on their exchange. I hope we get there at some point, but it's probably many years away.
Yeah, well, when they all have their individual regulations, I'm sure it adds a lot of complexity to it.
For sure. I mean, little things like, when money comes in, how long does it take to clear? What is your settlement period? US has pattern day trading rules where you have to, I don't know what UK's are, but I'm guessing they're different, so, every single locale has their own securities practice that we would have to, fine tune the software to support.
Well, they'll at least know that I asked, okay?
And we are working towards it. I wish I had a better timeline than, we're thinking about it.
I always feel bad. I'm like, I'm sorry, it is awesome, but I'm sorry that you're not able to use it right now. I have another question about the platform. This is one that actually has some controversy. So the way the M1 measures performance is money-weighted return, A lot of people think it's confusing. They wonder, why doesn't M1 use like time-weighted return, total return? I get questions about that all the time. Normally, I don't pay attention too much to the exact percentage return that I'm doing, but I'm interested to know the reasons for that.
Yeah, so in some sense, the reason that there are multiple types of return, so there's simple return, which is what you invested versus what you have now. There's return taking into effect your cost basis. There's money weighted. There's time weighted. The fact that there are multiple sort of showcases that there's no one perfect solution for it. If it was as obvious of just use this one, everyone would understand it, we would absolutely do that. And so in some sense, the money weighted is a trade-off. We know it's not perfect. We actually do think it's the best for a whole host of reasons. And one of the biggest reasons is a lot of those other returns will be more, just as, if not more confusing as people are adding and withdrawing money and switching investments. So, in the easiest example of, the total return, you invest 10,000, it goes up to 20,000, you then withdraw 10,000. You now have invested a net amount of zero. You have, $10,000 of gains.
Yeah.
What is your return? It's sort of an infinite return. Cost basis gets thrown off as, we're selecting which tax lot to, sell that minimizes your taxes. And so, you can show your unrealized gains, but then you have these whole baked in realized gains that get lost anytime you transfer security. So if you go from security A to security B, do you reestablish your cost basis and sort of say, hey, all the gains or losses you had in security A go away? Time weighted, same thing of, you make a lot of money, pull it out, then you have a bad time, like things just get thrown off. And so money weighted is, we think, the most accurate representation of how your money on the platform is actually doing. Based on when you deposited, what is the rate of return based on the amount of money in the platform. It can lead to some counterintuitive results, but we think it's the best of the worst. I do think over time we will move to the ability to toggle a lot of that stuff. But for now, it's we wish there was one perfect return measure.
There's not, from what I've looked at, but yeah, I that's one I get asked a lot, just because I think other brokers use them differently. And when people are used to one, they're like, why does this one use a different one? But other brokers also use different ones too. Like there's different ones that every other broker uses. So.
And most brokerages will simply do like simple gain or loss or based on cost basis. And the really tough thing there is I have to be careful about mentioning specific security names just for compliance reasons. But you buy $10,000 of security A, you double the money, you then sell everything and invest in securities B. On most other brokerage firms, they then say you have a net gain or loss of zero. And so, it gets erased anytime you switch your investment and stuff like that. And I think we would have you would get as many questions if we did that
Yeah, no, I'm sure. Well, that's pretty much all I have. I think from here, I want to know what, let's say that you have, 1,000 engineers, you have infinite money. What is the outlook? What is the end goal, the end vision of M1 Finance? What are the things that you're working on accomplishing?
Yeah, I mean, for us, it's really just building the premier personal finance platform. And so I think we're best known for investing, but we sort of say, hey, that's one component of personal finance. It's one half of your balance sheet. We want to make a premier platform for all of your personal finances. So your investments, your borrowings, how you spend and receive money. And so that's the three pillars that we've attracted. And it's really about going deeper into each. And so, investing, there's better return metrics, better finding investment opportunities, more options for how you do that. Borrowing, right now it's all secured line of credit. We'll likely move into unsecured, but always focused on lowest cost, most flexible terms. The spend product, how can you earn more on cash? How can you earn more when you spend? How can we give you automated budgeting and cash flow analysis tools and the like? And so it's really about building that holistic suite where it's integrated, the whole is greater than the sum of the parts, and it's automated. So you're really setting up the parameters. Here's how I want my money managed, and then the platform is taking over.
Okay. Well, that sounds good to me. I like all the changes that you make. I'm happy with most of them. I like the way the platform's going. Is there anything else you want to share with people? Any other message you want to get out while we have you here?
I think, we are big readers, and we watch your YouTube channel. We listen to user feedback all the time. We read the comments on Reddit. We're working on improving every aspect of the application. I think we have a lot of big audacious plans to improve. I wish we could move faster. I wish we could meet every need that we do, but we do hear the feedback. We do love the feedback. It informs our how we develop and what features we prioritize. And so the more feedback, the better, even when it isn't always the most positive. I can give you a confident answer that we are definitely working on all the issues that people come up with.
That's good to hear. That's good to hear. Well, hey, I appreciate Brian.
Yeah, absolutely. Appreciate you having me on.
Sure. Thanks for listening, guys. We'll see you.